All right, ladies and gentlemen, good afternoon. Good afternoon. Welcome back. Good afternoon. Welcome back. Welcome back. Welcome back. All right. I trust you guys are doing well this Friday afternoon. I hope you guys are doing well this Friday afternoon. Yep. Let's get right into it. Let us get right into it. All right. If you're joining us for the first time, please subscribe to the channel. Don't forget to subscribe. Don't forget to smash that like button. You will notice the links are on the chat. So to open up a trading account with us, tdmarketsacademy.com, tdmarkets.com, you can simply sign up for a trading account, right? We've got different types of accounts. Best suited for whatever needs you have. So we've got different types of accounts to suit your needs. Yep. So just check them out. Check them out. Yep. And then obviously we've got education. All the links are on the chat. I'm doing well. Thank you for asking. I'm doing well. Thanks. Yep. I'm doing well, thanks. All right, so let's get right into it. We've got Tanya, we've got Baticles, Wilbert, MQ27, Reshmi, we've got Luminate. I think that's Luminate, yeah? Luminate. Yeah, I think that's Luminate. We've got Luminate. Yeah. And everyone who's watching us, welcome, right? So let's get right into it, guys. It's been a good week so far. It's been a good week in terms of the setups we have, but they are a little bit slow. They are moving slow. We haven't had those big movements as yet. They're moving slow. AV Trader, Night, also in the building. All right, so let's get right into it. Let's talk about the charts. My passion. I love talking about the charts. That's a passion of mine. So this week has been a decent week. It's been a decent week. Our setups are there, waiting for them to move. But I'm noticing, I forgot, guys. I forgot that we've got retail sales today. Honestly, I forgot. So at 2:30, we had retail sales figures that came out. And as we can see, that is bad for the dollar. This makes sense. Now, have a look at the retail sales. This really makes sense. Why do I say so? Because if you look at the jobs report that came out last week, the non-farm payroll, look at that figure, negative 23,000, for the NFP report. Unemployment, even though unemployment rate went down, but average, the wage growth went down. Non-farm payrolls, look at that figure, right? So it makes sense why retail sales would be this bad. It makes sense because there was the spending went down, drastically down for the month of July, and this week's CPI report, we can see that it remained unchanged. Something is going on with these figures, guys. I just have a feeling that something doesn't make sense. It's just a coincidence. I know we spoke about this in the CPI session, but I just have this feeling in me that no, man, there's something either we missed or we missing. But no, these figures, maybe it's just my theory. I don't know. I might be wrong. I don't know. But the retail sales, it makes sense why we've got retail sales because of the jobs report last week. And also look at the ADP. The ADP also came out negative. The private sector hiring came out not negative, but lower than market forecast, lower than the revised. So there was This 93,000, it was revised, right? It even came out lower than that. You have your JOLTS job openings came out lower. It was even revised, came out lower. So the actual figure before the revision, the actual figure was 7.59 million, right? 7.59 million. So the 7.54. So it was revised. So the jobs market in the US for the month of July was just bad. That's why we have these retail sales. Hey, good afternoon. Welcome. You've got Shirley in the house as well. Welcome. All right. Let's just quickly peep what's happening next week. Okay. So just to peep what's happening next week, guys, right? We've got the CAD in inflation data. The markets are going to be keeping a close eye on the meeting minutes, the FOMC meeting minutes. Remember, this is not the interest rates, it's the meeting minutes of the previous meeting. So that's going to give us an idea of, it's just going to give us a bit of a view heading into the next FOMC meeting. We have Australia's employment report as well. So just the people next week. Cool. So let's have a look at the charts. That's why there is a bit of movement here in the charts. Let me just switch just 1 second. I believe it's this one. There we go. All right. So our setups are still intact except the dollar and silver, right? So both of them were break evens. So my sell on gold and silver, they were break even, right? So what is happening now? So what's happening now, guys, is let me first take you back. All right. I just want to remove all of these objects. Right. Let's just get a view of. All right. So now how I'm looking at gold, right? My view hasn't changed on gold, right? I'm still anticipating one more drop on gold before we go up. So remember, long term, I am bullish on gold. Long term, I'm keeping a close eye on this move, right? On both gold and silver, according to the structure we have. So now, the reason I sold short term and I want to sell short term is since we have a new structure there, right? Anticipation from the beginning of the week was that we're going to get a correction and then the trend is going to resume trading higher. So the focus for this week was to take advantage of the correction. The focus this week was to take advantage of the correction. So this is the correction that's forming. Now, I'm anticipating a much bigger correction than this one. So if this is the correction, then we are going to continue going up if this is the correction. But, I was anticipating a much bigger correction, something like this before we go up, right? It might form. If it doesn't form, then you're going to go up. So now, with that view that I have now, this move towards the upside, it's reacting from this. It's reacting from this, right? I'm just going to remove this one. Let me remove this. Yeah, it's reacting from this. Now, here's a question, right? Here's the question we need to answer now, right? With this price action, there's a question. Now the question is, if this correction gets bigger, right? Meaning it's a corrective pattern. If it gives us a pattern, then the movement we are likely going to get is one more push down before we go up, right? So it's going to be something like this, where we got the first leg of the correction. Now we're in the second leg. So anticipating the last leg, the third leg of the correction before we go up, right? This is my anticipation. So that's why I've just been focusing on short-term selling gold. Now, this move that's going up right now, I wouldn't anticipate this to be a continuation as yet. And I'll explain why, right? I wouldn't anticipate this to be a continuation as yet. Instead, I would I would look for a lower high. I would anticipate price to form a lower high. And then after that lower high is formed, I would look for my short-term sell one more time before I look for the buy, right? So what I would do here is I would put a Fibonacci on the 4-hour chart. I would put a Fibonacci, and then I would you see where price is right now, this area, right? I would literally monitor how price is going to react around this area, and I'm looking for a rejection basically. So I would wait to see if price will reject the zone. If it rejects this zone, you guys know I'm looking for weeks, right? So the rejections I'm looking for is like a week like this. So I would see if we're gonna get a week. If we get a weak rejection, then I would start to look for my setups. I wouldn't sell immediately. I would start to look for my setups. All right, that would be my view. The only way this is gonna be invalidated is if price, obviously if price proceeds towards the upside, but if price was to do this, right? Let me show you. If price was to break out of this, right? Yeah. So this zone here, this is the week of this bearish candle. We can see we had a bounce, right? Even though it created a new high there, another bounce new high there, and then it dropped. So the only way I would change this view that I have is if price was to break out of this, was to go up and do this, right? That's when I would say, okay, now the market has invalidated the plan that I had, the view that I had. Therefore, I'm reanalyzing and possibly changing my bias, right? But as it is right now, my bias, I'm still sticking to my bias. I'm looking for one more drop, one more push down, and then to come back down to these lows, right? And and then anywhere around this area, I would then look for a buy. I would look for my buy setups down here. So first my sell setups, and then I would look for my buy setups. And this is all because of this, guys, right? Let me earlier on, in case you guys missed the earlier session, right? I asked the guys what challenges do they have, and I think it was MQ. You said structure, right? Market structure, it's a lot. You're still figuring it out. You're still mastering it, market structure. I'm gonna just give a nugget on market structure, right? Just give a nugget there. So now, and let me look for an example on the chart, and I'll explain. I'll explain. And this is part of market structure, the behavior of the trend sometimes, right? This is how the trend tends to behave at times. Let me see if I can get a good example of this. The time frame is not important. It can be on any time frame. I don't think. There we go. I've got a good example there. There's a perfect example. I want us to look at this trend here, this structure, only this structure here. There's something very important about the structure, right? Yeah. So not this and not this, right? Great stuff. You guys are with me, right? Now let me just zoom in. Now look at this. So now sometimes this is what the trend does, and this is why I'm a big advocate of also really observing the behavior of the trend, because the way the trend moves and behaves will give you insight on how it's gonna continue behaving in the future. So here, the trend started down here, all right? And then it went up, right? So I want us to look at this wave by wave. So now you have this first impulse push, right? And then notice this. You see what this is, guys? You see what is this? Right? What is this? What would you say this is? I think there's a bit of a lag. I'm not sure. Yeah, I don't know if there's a lag. But what would you say this is? Let's see. Anyone? A correction? No, it's a continuation pattern. It's a corrective pattern. It's not a reversal. It's a corrective pattern. Yeah, you can say it's a flag, you can say it's a flat, but it's a continuation pattern, right? So here's my point. Now look at this. Here's my point. Follow me. So you have your impulse up, and then you've got this continuation pattern, right? So this is where the trend started. And then from this continuation pattern, we had the continuation up. So this is where the trend started. Now, my point is the behavior of the trend, so that you know how the trend is going to move in the future, right? Now, after this impulse, the market could have given us a simple pullback, right? It could have done this and then continued up, a simple pullback. But what it did is that it gave us an impulse. Instead of a simple pullback retracement, it gave us a pattern like this, right? And then it continued going up. So what does this mean to you? The first few waves of the trend, now listen to it, the first few waves of the trend will give you an idea of how the trend is likely gonna behave in the future. So you see how we didn't get this, we got this, right? This is a pattern here. So you would have done this to look for maybe your buy opportunities, right? Great stuff. Now notice what happens in the future. So my point is this pattern here would have given you an idea of how the trend will move in the future. So meaning the next time the trend corrects, or there's a correction in the trend, you would expect this. The next time it corrects. You wouldn't expect price to give you a pullback or a retracement, but something like this, because of how it started. Now look what happened. So the impulse went up, boom. And then we got the correction. Look at how this correction is. It's the same. It's the same as this one. Right? Let me go back, right? I don't want to lose you guys. So what I'm saying is, the trend, the way it behaves, it's most likely to continue behaving that way for as long as it continues in that direction. So if the trend moves in an impulse, corrective pattern, and not a retracement, corrective pattern, impulse, another corrective pattern, that means this is how it's most likely going to move in the future. So which means the next time the impulse completes and the market starts a correction, you would not expect anything apart from the correction. You would expect the corrective pattern to form, but not a retracement. You would expect a corrective pattern to form, but not a retracement. Why? Because of the behavior of that trend. So if you were to look for buys here, you would use this pattern to look for buys, right? That's my point. So let's go to where price is now on gold. I want to show you guys something, right? So now the reason why I'm saying I'm anticipating one more push before we go up because of the correction is because the trend started here to go up from here. So notice how it starts. We have this explosive move up, and then here we had a corrective pattern. So now what I would do now is that the next time the correction starts, so this is the impulse up, right? The next time the correction starts of this degree, not of a lower degree, but of this degree, of this current structure, I would anticipate a continuation pattern to form, but not this. You see this push down and a continuation up. I wouldn't expect this to form. I would expect price to repeat this again and give me a correction before we go up. So that is the basis of why I'm saying I'm anticipating one more push down before we go up. Right? So these trends, they tend to give us, there's always hints that we can take. But now if the trend has your normal retracement, impulse retracement, that is how it's likely gonna continue moving. You see that? So if this continues to go up like this, then that means this whole move here, this is a part of this whole move. If it does this, it's a part of the whole move, which means at some point, gold is going to give us a correction, a big correction, something similar like this, right? Before it continues trading up. Before it continues to, trading up. If it doesn't create that correction here. You see that? So that is structure and the wave patterns within the structure. I think Nasdaq had an example, something like that on Nasdaq. You see, there we go. Perfect. Let me use the daily time frame. Perfect. You see the market giving us this formation here. It is not by mistake. It is not just a random price action. No, it's doing this because of how this trend has been moving. So if you notice, this was the previous correction. So you had this explosive impulse up, corrected, right? Impulse up. So this correction was likely going to happen. It was likely going to happen. The correction was likely going to happen, right, before price went up. Let's even zoom out. Okay, now there are different degrees now. Now there are different degrees which I need to explain and takes a bit of time, but it's fine. But that's my point basically, right? That the trend will leave clues for you to take advantage of. Leave clues. All right. US 30. Let's see if we gonna get an example that I can use on US 30. Perfect. So, this one also has different degrees, which I don't want to complicate this example explanation, but it's fine. I hope you guys get the picture. But okay, anyway, so let's see. So now on gold now, right? What gold is doing now is I'm just waiting for certain confirmations for me to know what to anticipate. So as it is right now, right? The market is going up. Yes, there are people who are buying right now who took buys, which there's no problem. Yeah. So if this rejects and gives us a lower high, I'm gonna look for one more push down before a buy. If it does that, right? So this would be a short-term sell for me, back down to this low, and then I would start to look for buys somewhere down here, right? But now what if it goes up, it breaks? Then if it breaks, to me, it won't be a matter of missing out this move. That's not how I think, when I look at the charts. So if it does this, then it's fine, right? It's fine. If it does this, it's fine. I will probably look for a correction and buy instead, right? Because now it would confirm that now we're going up. We're not going to get that correction that I'm anticipating. We're going to go up. If it breaks the zone, then I'm going to look for a buy. So that's my thought process on gold. All right, so now I'm not going to do anything. I'm not looking for a buy as yet. unless I get that confirmation I'm looking for. You look at silver as well, right? Silver, same thing. Silver, same thing, right? Yeah, silver, same thing. Anticipating a bigger correction here, right? So you see how the trend started. Let me remove this. You see how the trend started here, right? We had the impulse up and the correction. So this correction it's a pattern, right? It's a continuation pattern. You can call it a flat, you can call it a flag. One is the same thing, just that a flat pattern, it's part of the Elliott wave theory, but a flag is just your classic chart patterns. So you've got a flat here, the price went up, right? We've got new structure. So I'm anticipating we're going to get another flat, a regular flat, and a continuation up. So long term, I'm still bullish. Long term. So here, we're trying to see where the market is right now. We're trying to see if it's going to give us that regular flat, that bigger pattern, so that we can take advantage of shorts. We can take advantage of shorts, trade that correction. And then when it's done, we're then going to start to look for buys. So this one also here, for me to say we are not selling any as yet, it would need to do this. I think, let me just remove, it would need to do this. Right. It would need to break above this, because we can still get a rejection here. Just like how we got a rejection of this candle, we can still get something like that. So it could, let me go to the 4 hour. Right, it could do this, boom, and then go down one more time, boom. And what would this be? This would be boom. That would be boom. It would be the same boom as this boom. So I digress. Let me come back. So yeah, so you see that. There we go. There we go. Right, but now if it was to do this and not give us this, then it's fine. We're still gonna continue looking for buys until a time where we get something like this. So we just have to wait. Now this is the question now that I was talking about, right? I'm sitting looking at gold and silver, and then I'm seeing the question, how do we respond to that question? That's it. I mean, there's many other ways we can respond to this question, So yeah, so for me at the moment, I'm still observing gold and silver. If it goes up, I can see it's strong. It's moving up with a lot of volume, which people who are trading lower time frames, definitely like the minute time frames, definitely this is your trend. Yeah. If you are trading the 5 minutes, the 1 minute, this is definitely your trend. You can take advantage of this trend. Definitely. You can take advantage of this trend. For sure. On silver as well. For sure. Definitely. Just that I'm looking at a different time frame and a different view, But this is definitely your trend. So you would trade this trend for as long as it lasts. You would just trade it. Continue, just trade it. All right. So yeah, so just to touch on gold and silver. So yeah, so I'm not gonna do anything. I'm gonna wait and see, right? So yeah, let's see what's gonna happen there. Can you check US30? US30 analysis still the same. All right, US30 still looking for buys. Well, personally, I'm looking for buys on US30, right? I'm looking for more buys. I'm still holding the previous buy. I'm looking for more buys. So US30 has gone into a correction as well. It has gone into a correction. We've got new structure that formed. So this whole movement here is a correction. If you look at this on the 4 hour, that's a correction of this, right? So this correction, for me to buy US30, it's, it's either we're going to come back and tap the structure. There's a possibility we're going to come back and tap the structure. So meaning for me to look for the buy, I'm looking for price to come at least close to the structure for me to look for a buy. right? So yeah, I want to look for a buy somewhere here. But if you take a look at this, what's happening right now, you will notice that price is actually moving like this. Whoa, it's actually moving like this. Well, let me draw this properly. Yeah, it's actually moving like this, right? So, well, it is creating lower lows and lower highs, but it's just too choppy now. It's just too choppy. It's moving like this. Yeah. So now what I would do is, yeah, it's either I would want it to come back down to these lows of this channel, right? Every time it comes back here, I would look for a buy, right? Or if it comes back down to the structure, I would look for a buy. It's a bit choppy at the moment, right? So it's either it's gonna break up or it's gonna come back down here before it resumes towards the upside. It's either this is, yeah, something like this. But just be careful with this one, guys, right? It's a bit choppy at the moment. It might find its feet later on in the afternoon. It might just find its feet, but yeah, it's a bit choppy right now. And what it's doing, it's trading within this channel. So yeah, so within the channel, it's just random movements within the channel. So either we're gonna break up to get the move towards the upside, or it's gonna come back down here to get the push up. So for me, I would not look for sells on US30. The same as NASDAQ. I wouldn't look for sells on NASDAQ, right? I'm still swinging it. So the setup hasn't changed. Still looking for a continuation up. Yeah, so I'm still swinging them. All right, so US30, yeah, and NASDAQ. Let me see, check Euro USD. Yeah, let me show you what Euro USD is doing. Where is it? Yeah, this is where we are now. Okay, so obviously now because of the retail sales, right? We got the retail sales figures. That's why we're seeing this strong move towards the upside, right? But besides that, let me just remove this. So this is headed to that supply zone. Euro USD is headed back to that supply zone. Here's a supply zone. Here, it's headed to the supply zone. And what do we know about an order block or supply zone? We know that this is generally where price would reverse on the supply zone. This is generally where price would reverse. So that's where it's headed right now. Yeah, unless of course it breaks the supply zone, because the market can still break the demand and supply. But as it is right now, I'm waiting for it to reject the supply zone, and I'm looking for a short-term sell from the supply zone, right? So we have a lower high and the supply zone formed, the order block formed. So we're looking for a push down on the order block. Looking for one more push towards the downside on the order block. So it's going there now. Any rejection from here, looking for short-term sell. Any rejection from here, right? So if it happens that it breaks this order block, then it will probably come back for a retest of that and then a continuation up, which at the moment we don't have confirmation of that. So looking for one more push down, right? So this is the daily time frame order block. That's the daily time frame order block. All right. Yeah. So if you're holding buys on Euro USD right now, just be aware of this. Be aware of this zone if you're holding buys. Just be aware of this zone. All right. Place the buy in the morning, on the 1 hour. hit TP 1 2 3. Okay, no, that's good. That's good. If you hit TP, no, that's good. That's good. So yeah, it's headed to the daily time frame order block. Check Euro NZD. Euro NZD. Oh yeah, it's been a while since we had a look at it. Let's see. Euro NZD. I know that Euro AUD. I'm still holding the short on Euro AUD. Yeah, still holding the short on Euro AUD. Now Euro NZD. Let me clear this chart. Okay. Cool. So I was actually looking at this, right? So it seems like Euro AUD. Let me use the daily time frame. Euro AUD is coming back to create a low. It's coming back to create a low, right? Why do I say so? Everything is still bullish here, right? So what's happening here is this. Let me show you. You see what happened here is the same that is happening here. It's the same thing that's happening here. So it is not a reversal. It is not a reversal of this structure, because this structure is moving like this. There, this is your major impulse with its own pullbacks. You had the correction, the continuation. Now you see there's a correction. Now from this correction, would be looking for a continuation once this correction is done. There we go. This is exactly what I'm talking about. Looking at the trend and understanding how it's behaving, so you know what's going to happen in the future. So obviously that was a continuation pattern which came back down to the low before it went up. So this is the highest probability. Price is going to come back down to this low. It's going to come back down to this low. All right. So let me zoom in. Now that you guys have the picture, let me zoom in here. Let's just clear this. Yeah. So I'm just going to put it. Yeah, so this is, I'm going to remove this just now, but this is what's happening, right? So we have a low here, and the next possible low is down here, somewhere down here. But it doesn't need to touch this as long as it breaks the previous low. So this is the previous low, right? As long as it breaks this previous low, it is going to create a low somewhere here before it continues up, right? So therefore, the opportunity here is this. Here's the opportunity. One more push down. There's the opportunity, because this could be like your 400 pips. There's the opportunity up until this completes before we get this. All right. So for now, the opportunity is this one here. There. All right. So this is like the bigger picture. Now there is a continuation pattern forming here. Let's remove this. Remember this low, right? It needs to break this low and create a new low for it to complete what it needs to complete. So let's see what's happening right now. Let's see what's happening right now. All right. Not much on the daily time frame. Let me see. We've got the structure. Oh, okay, now I see. Okay, now I see. All right. So there's a pattern also here, right? There's a corrective pattern that's forming here, right? And this corrective pattern is a continuation of this impulse. So once this pattern is done, this is the highest probable move. So within the pattern, now patterns, for you to understand patterns, you need to understand the movements within the pattern. So whether it's symmetrical, whether it's like a flat, you need to understand the movements that completes the pattern. So what do I mean by this? What I mean is this, right? You see this high here. We've got this high here. There's a possibility that before price drops, it's going to drop from this high. That possibility is here, according to a flat pattern. A flat pattern is like this, right? It's like that. So a flat pattern would need to break the previous high before it continues down. So there's a possibility that before this drops, it's going to complete this move by going first towards that high and break that high before it goes down. That possibility is there. Now, this is because of this specific pattern, right? But remember, there is also the symmetrical as well. price can still create a symmetrical pattern like this at the same time. At the same time, where with a symmetrical pattern, this is the high there. This would be the high, all right? And then from there, price would then drop from that high. From that high. So there are two possible patterns that could form. This could form the symmetrical pattern, or it could form the regular flat pattern. So now, the question then is, how do you know which one is going to form? Well, how can I put this? It goes back to the setups. It goes back to the setups. Like for instance, if the market is going to form this, right? Obviously, it's going to break out. It's going to break out. And once it breaks out, you are most likely going to find and get your setups here. So for me personally, what I would look at here, if it breaks from this, is that, we have a let me just look at the daily. Let's see on the daily. Yeah, so I would want price to break this structure. If now the market is creating this now, and then you get the breakout, I would want price to break out of these structures here, and then this structure, and then any setup I get below this line, I would take, right? Any setup I would get below this line, I would take, right? Because this would then confirm that we could be doing this. But now, if for some reason we see price pushing up, let's say right now we see price pushing up for some reason, then we're gonna go with this possibility. Where price is going back to this high, breaking this high first before it goes down. This possibility there. Now you see how with this particular one, I'm showing you guys two perspectives, right? Same direction, but two possibilities of how we could get this move. Sometimes when you use the Dow theory, let me type it down, right? These are the methodologies that I learned way back, right? If you use the Dow theory, you guys can do your research on these theories. The Dow theory, the Elliott waves, principle. Yeah, Elliott waves, and basically wave analysis. These three methodologies, and I've studied these methodologies. I know these methodologies, right? So this is the basis of my forecasting. So when I forecast the market, I use these methodologies. So these methodologies are all about wave patterns. Yeah, they are all about wave patterns. So it teaches you that when the market moves, it doesn't matter what trend it is. When the market moves, it moves in waves. It moves in wave patterns. That's it. It moves in wave patterns. That's why you've got your impulse correction, right? But now it gets a little bit deeper than that. Now for the Dow theory, to be different to the Elliott wave, to be different to the wave analysis, is because of certain principles, certain rules, and certain guidelines. The rules and guidelines of the Dow theory is different to the Elliott waves, but both concepts is based on wave patterns, both of them. But you would find that the Dow theory will then break it down and give you different guidelines to the Elliott waves, different guidelines to the wave analysis. Yeah. So yeah, but so this here, what I'm showing you here, right? It's part of this. Now what happens is, the reason why you would then see me mentioning this possibility and this possibility is because of the rules that governs and also the guidelines that creates the movements within that particular structure, the movements within that particular pattern, which in this case is a regular pattern. If you understand those waves and those lags, right? I'm sure some of you guys have seen someone analyze and then they do this. They've got letters like this, something like this, WXY, right? These are the markings within Elliott wave principle, WXY, the markings within Elliott wave principle. Or you might have seen maybe me, saying ABC. And then when it gets to C, that's when it drops. That means the pattern is complete, like this. That means the pattern is complete like this. ABC, done. Then you get the move towards the downside. Then it gets a little bit further than this. Then it says, okay, that's an ABC, right? It's a 3-wave movement, ABC. Then it says this now. It says, okay, we have a higher degree structure, which is like this. I'm going to change the color, right? A higher degree structure, which is this A, B, B, and no, A, B, and then C down here. C here. Right. Like this. So you've got the same thing. This is the same thing. This is an ABC. This is a Dow theory. ABC, 3 waves, 1, 2, 3, 1, 2, 3, 1, 2, 3, the Dow theory, right? And then the markings. So this one that you see here, is the lower degree of this big one, of this big ABC in blue, the lower degree. I'm not going to get too deep into this, but this is basically, So when you look at this here, this A, let me just move these down. Right, when you look at this would be A, the B would form here, and then you would get the C. The C would be somewhere above the A, right? And then this would be this pattern. So that top here, this top where price fell, is this top. Right here. This top. There we go. All right. Yeah, I went a little bit, almost a little bit deeper, but just to explain my point, right? So you guys can just do your research on those methodologies. But yeah, so Euro NZD is bearish. It's just completing this pattern, this formation. So it might just drop here, give us setups, or it might just go back to this high, tap it, and then drop. Right? It could just do something like this, and then one more push down. Yeah, that's Euro NZD. There we go. Great stuff. Yeah, so Euro AUD also one more push down, right? Anticipating one more push down. Euro NZD, boom. I've heard of the wolf wave also. Oh, there's another one. There's the wolf wave. To be honest, I haven't heard of the wolf wave. Wolf wave patterns. Let me see. Let's Google the wolf wave. Oh, you know what? The wolf wave is a pattern within the Elliott wave pattern, right? I think, yeah, the wolf wave is a pattern that has different rules, slightly different rules, but it's part of the Elliott wave theory. Yeah, the Elliott wave theory, the wolf pattern, part of the Elliott wave theory. Yeah, I can see here. I just Googled it here. It's it's part of the Elliott wave theory. Yeah. So yeah, that's the wolf wave. The wolf wave. All right, but I'm hoping that you guys are learning, you're enjoying. All right. Obviously, I can't go deep into these things, right? It needs it needs like 5 sessions for you just to break it down piece by piece. Next time we continue, because Elliott wave principles is a complete theory. It's a complete theory, right? You don't have to learn it. You don't have to learn Elliott waves and all of that. I'm just showing you because there's different trading methodologies. There's many trading methodologies. You've got ITC, there's a complete trading methodology. You've got SMC, a complete trading methodology. You've got other ones that are still gonna come, right? But yeah, these are complete methodologies, right, of how price would move, right? So I found Elliott wave to be interesting for me, and therefore, my forecasting, the way it's so simple is because it is based on the waves the market creates. But now, what then happens is that these waves, sometimes we need to wait for them to form. Sometimes the market changes the wave. Like you see right now, we are waiting for this pattern to form. Within the Elliott wave principles, it also states that the market can invalidate this wave. So if we anticipate there's going to be ABC, the market can invalidate it. But once it invalidates that wave, it would create a wave for you to see that it's going to invalidate this wave. It will create something to see. So it's an interesting methodology. Maybe you guys just research, read it, go through it. You don't have to really learn, but just read it to see, it has the rules, the guidelines. You've got different corrective patterns, expansion. It includes Fibonacci as well. It doesn't include supply and demand. It just includes Fibonacci, right? It works with Fibonacci. But because we've got your order blocks, we can still incorporate order blocks in there as well. So it's a fascinating theory that I learned. The Dow theory as well. You see, back in the days, guys, in 2015, 2016, right? That was the popular methodologies back in those days. You see, right now, what's popular right now is SMC. Yeah, it's popular right now. Back in the days, the popular methodology was Elliott waves. It was fire. I miss those days, man. Trading was different. Anyway, let me come back. My mind just went back, just reminiscing. Yeah, but no, those were the fun days. The trading industry in South Africa around those times, listen, to me, it was fun than it is these days. Because these days now, it's all about flashy things now. Back in the day, I think trading back in the days, it had more weight, right? I'm not saying, wait. I'm not saying it doesn't hold more weight now. But with what happened, right? With what's been happening, trading doesn't hold more weight anymore because of the scams that's been happening. The scams, because of the, the flashy things. I'm not saying those people are scams that are flashy. I'm not saying that. Please don't. I'm not saying that. But the way it's presented now, it's a lot more different to how it was back in the days. Back in the days, it felt like business, man. It felt like it's a business. It's a business. It's a business. Alright, guys. Yeah, but anyway, let me come back. So now it's a little bit different now. The way it's presented now, it's like, but it's still trading. Still trading. So these things that I've mentioned to you guys, right? You don't have to learn them. But if you want, you can, right? I mean, they're on Google right now. You can Google them right now. You'll probably download PDFs on those things. You don't have to, but if you want, you can, right? But yeah. Yeah. Anyway, so Euro NZD, I would be interested in this drop on Euro NZD. No, I would be interested in this drop. And for my take profit, this is what I would do, all right? And this is also part of what I'm showing you is part of Elliott waves, that theory. Now, I would be interested in a short, right? But up to what point? Up to which point? Now, this is what I would do now, right? I'm giving you like a full plan. I'm gonna take the Fibonacci, right? The Fibonacci retracement, and I'm gonna measure it from, let me just say A to B, like this. So A to B. I just wanna, on this move, I'm gonna measure it from A to B, right? The reason I'm doing this is I wanna show you something. Wait, I'm looking for the 6. Yeah, let's do it this way, right? You can do it the way I've done it, but let's just do it this way, the other way around, right? So I'm gonna take my Fibonacci and measure it from A to B, but now going up, right? Going up like this. The reason I'm doing this is because I'm looking for the 161. So this area, the 161, between the 161 and the 1.27, I would be interested in selling this down to these areas, right? It could go as far down as 161.8, but this zone here, and then from this zone, that is where now I would anticipate the pattern will complete. There, that is where the possible low would be, right there. You see how it is 1 2 1 2. Oh, so it seems like there's no volume in the markets. Yeah, I mean, it's a Friday here. I'm thinking about the volume here in the stream. Yeah, it's a Friday. Fridays are like this. Fridays are like this, right? So if there's no volume, what do? We wait. You can continue your back testing, but yeah, these things do happen. Yeah, one more push down. So yeah, so in the upcoming trading rooms with myself, we will monitor Euro NZD for a push down. We'll monitor Euro NZD for a push down. All right. Great stuff. All right. So, ladies and gentlemen. All right. Hope you are learning. Hope this is valuable. If it is, please like, subscribe. And yeah, so for the 3 p.m. session, we're gonna end it here. We're gonna come back at 6 again. So last night, there was a bit of a technical issue last night, right? That's why you guys would have noticed we didn't have the 6 p.m. session last night. There was a bit of a technical issue there. So, but yeah, that we're gonna come back at 6 as well to let's see what's gonna happen. I don't think there's gonna be anything that's gonna be moving. Yeah, anything that's gonna be moving, but let's see, right? Every trader, learn a lot. You're welcome. I hope all of you guys are in the TD Markets Academy so we can just break this down. So what I've just shown you is surface level. We break it down, right, in the academy. But yeah, guys, I enjoyed these sessions. I enjoyed this session. So have a good one. I'm going to sign out here and let us come back at 6. Let's see if there's anything, but I doubt there's going to be something. But let's see if there's anything at 6 and then we'll take it from there. But this week has been a decent week. The JPY is moving. I think it's still going to continue next week. All right. So have a look at that. The commodities, we're waiting, right? Waiting to see what the commodities will do. Right? But yeah, that's it from my side, guys. Have a good one. I'll catch you guys in the evening and we'll take it from there. Cheers.